2017-16 was a near identical setup. That is just the phases of how the banana zone tends to play out. You tend to get the first spurt. Bitcoin went from 50,000 to 100,000. It then corrects a bit. Everyone freaks out. I mean, it's ridiculous. I mean, it's literally ridiculous. The people freaking out from a correction like this. And then you usually get the alt season part. And that's when any moron can make money, including myself, in anything that you hold. And that is the alt season. That usually, in full throttle goes through till, let's say, April. And then it tends to get more selective in the final phase where they concentrate on the key themes.
Don't fear the dip. Bitcoin's corrections often lead to incredible surges in crypto. That's the message from Raoul Pal, the CEO of Real Vision. Despite recent market corrections, Pal is not worried one bit. With fiat currencies losing value, he expects crypto adoption to skyrocket soon and push the market toward a potential $10 trillion valuation. This is a defining moment where investments could yield massive rewards. Pal is certain that the banana zone phase will bring a truly life-changing parabolic surge. Make sure to stick around until the end of the video as Raoul Pal weighs in on crypto's future. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy staying up to date with finance content, consider subscribing or liking the video. It's free and you can always change your mind. Now here's Raoul Pal with his expert insights.
Look, overall the trends are all right, and we haven't even got the bloody administration in yet. We haven't got the clarity that we're all waiting for, and everyone's at kind of a max fear right now. It's crazy.
What is the banana singularity and why are we all saved?
Okay, so that is just the phases of how the banana zone tends to play out. You tend to get the first spurt. Bitcoin went from 50,000 to 100,000. It then corrects a bit. Everyone freaks out. I mean, it's ridiculous. I mean, it's literally ridiculous. The people freaking out from a correction like this. And then you usually get the alt season part. And that's when any moron can make money, including myself, in anything that you hold. And that is the alt season. That usually, in full throttle goes through till, let's say, April. And then it tends to get more selective in the final phase where they concentrate on the key themes. So everybody's asking about, I put a big thread about it yesterday. Has the market topped? What's going on? Is that M2 chart going to play out? Are we all fucked? Is it going down to 75,000? Yada, 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 yada. I mean, it's all day. And then it's like, oh my God, the Fed aren't going to cut rates. That's the end of the market. They can't, just so much noise. What I urge people, I wrote, I think, in response to you, Ovi, is 2017-16 was a near identical setup. So the market has been following the pattern. But outside of that, Trump got elected. Everyone went, oh shit, tariffs. They're inflationary. The dollar screamed higher. Rates went higher. And then what happened was Trump came in and said, we need to get a lower dollar. Scott Bessent's already talked about it. The other guys coming in as the Economic Council guys already talked about the dollar being a problem. So I think they're using the dollar as the stick and will then offer it as the carrot to the Chinese, the Canadians, the Europeans, and everybody else, which is, if you agree a trade deal with us, we will help lower the dollar. The dollar is a function of liquidity, which is why rates are so bad as well. There's actually not enough liquidity in the system. And I think that's sort of somewhat purposeful overall. But if we go back to 2017, and we had that setup of the dollar turning over and then rates actually came down for the rest of the year. The other thing, the Fed were raising rates all of 2017 and crypto went up.
Yeah.
USM2 went down. So all of the things you would be looking for, they were all in reverse. So what really was happening in 2017 was China had been beaten up by the strong dollar in 2015, 2016, and their economy was super slow. China increased the balance sheet and the Fed lowered the dollar. The Europeans did some QE and the UK did some QE. We got a near identical setup. The market is over extrapolating tariffs and fears. Whatever rates do is irrelevant. It's what global money supply does. Not global money supply, global liquidity does going forwards. We know back in 2017, the Treasury drain the TGA for the same reason. I mean, it's like literally everything is an exact rerun of what happened. So, look, I don't expect an exact rerun this time, but probabilistically speaking, there's nothing to be concerned over. Now, when we looked at that big M2 drop last time around, and this time around, it leads by about 12 weeks. So last time around, we had an identical M2 drop. You can see it. I don't know if you can share that chart you're looking at now after that one. So this one shows the near identical pattern in M2 back then versus now. What happened was the dollar weakened, global M2 went up. What also happened is the NASDAQ had a similar correction, crypto very similar. And what crypto did was didn't follow M2 going forwards because it starts to decouple as the bull market takes place. And what happened was it did an 8-day correction and did negative 35%. This time it feels like it's slightly more sideways. Whether it goes a bit lower or not doesn't really matter. But the point being, you're looking for the bottom as opposed to a sharp acceleration from here. But either way, it's over pretty quickly. And then what happened last time around is the moment Bitcoin hit a low, alts took off. And so that's my general thesis on all of this right now. This is pretty much playing out exactly as I've been expecting it to play out. And whether that's in liquidity terms, because it's a rerun, because we've got this debt cycle, it's the same bloody thing, right? So that's my overall view. It's like it's all fine. Financial conditions drive liquidity. And so crypto's been following financial conditions. So it suggests that liquidity comes back. So, but then in the full bull market phase, it normally does decouple. So I don't think it's doing anything unusual whatsoever. And over time, I think, yes, we get product market fit. I don't think AI is the product market fit currently. I think that's all narrative based versus the reality of where it is. But we're now a $3 trillion asset. You need more institutions in to drive the asset higher anyway. You know, people forget that. Like the institutions here, it's amazing. Well, it has to be if you want 100% rise. You need larger pools of capital now because it's a much bigger market. But that's a good setup, right? It's just a good setup for the year.
The current cryptocurrency market is similar to the patterns from 2017. Raoul Pal explains how Bitcoin often starts with a big surge, experiences a correction, and then enters an alt season where other crypto assets rally. While some worry about rate hikes and market dips, Pal points out that global liquidity is the real driver of crypto's path. He predicts that Bitcoin is close to bottoming out, with a strong recovery likely to follow as global monetary easing picks up pace. This could be the perfect setup for significant gains ahead. Now let's go back to Raoul Pal as he discusses further.
So what have we got here? We've got us over extrapolating on the future of AI. The reality, because I spend a lot of time in AI world, is the reality is agents don't exist in AI yet. Right? So we don't have fucking agents. What we have is a bunch of macros and plus AI search and a chatbot. Right? This is not agents. And to watch ThreadGuy and all these guys going, oh my God, this is the future of the world. They are so far behind where AI really is. The technology we're seeing in this token side is 2-year-old technology. So we are not anywhere close to what is about to happen in AI world in 2025, which is full autonomous agents. It'll blow everybody's minds. And it will not come to crypto first because, again, people are like, oh, there's so much money in crypto. 16 billion, that's a fucking funding round for OpenAI. Yeah. They have so much density of talent between Anthropic, OpenAI, Google, and Meta that it is laughable to compare us to that. So I think that the risk is here that we've hit peak attention because everyone was bored over December. And we've forced a narrative. The narrative over time will be like the metaverse, spot on. Like DeFi was, spot on, right? These narratives are right, but we're over extrapolating, which is why I think it's a mid curve. We're over extrapolating, kind of claiming that we've reached the holy grail within a bunch of degens. And I think Ovi's point, it's the same fucking people. It's exactly the same people who were pushing WIF 6 months ago. And so we're not doing anything different. I spend a lot of time with people like Andy Ellie and stuff like that, finding out really what's going on. What was interesting from him was getting a mimetic to leap from his model to the human conscious and become viral. Okay, that was very interesting. And so You guys using an AI for Rec Guy may be nothing to do with, is it this some sort of agent that people can use, and more is, can it implant virality of memetics? That's very powerful. That is a proven thing, and it ended up raising capital in this random thing.
Bank of America just confirmed their position of no more rate cuts. Given what you're saying about Trump coming in, rates having to go lower with a lower US dollar, is Bank of America just flat out wrong?
I think rates do come a bit lower still. But as I've said, it's not about the US. Rates went up all the way through 2017. It's not about US rates. It's about global liquidity. That's the single most important thing for people to understand.
Meanwhile, the crypto community is celebrating Donald Trump's inauguration, marking the end of what many describe as 4 years of regulatory hostility under the Biden administration. With Trump's arrival, major policy shifts are on the horizon, including pro-crypto executive orders and the appointment of crypto-friendly officials like David Sachs as AI and crypto czar and Paul Atkins as SEC chair. These changes aim to legitimize the industry and foster its growth. A notable policy reversal includes ending debanking, a practice where banks were pressured to avoid working with crypto companies. This regulatory stance, referred to as Operation Choke Point 2.0, forced many crypto startups to relocate offshore or shut down entirely. Now, with this barrier removed, industry leaders predict a crypto startup renaissance as businesses return to the US market with renewed confidence. Anthony Pompliano, founder and CEO of Professional Capital Management, is optimistic about the Trump administration's plans to refine regulations. He believes these changes could simplify accounting rules and make Bitcoin transactions easier, which would encourage broader adoption. With everything lining up in its favor, it's only a matter of time before Bitcoin breaks records yet again. Anyway, guys, before we go, if you want to stay most up to date on the crypto and Bitcoin world, make sure to subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top-on-chain analysis, trusted by over 50,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video, and that it provided you with some value. I'll see you all in the next one, and as always, all the best.